I looked to the Bitcoin price to see how real is this deal, and seemingly it was pretty real. And so everyone's starting to try and engineer, well, when is this going to open? What does it mean for the oil market? What does it mean for global supply chains? What does it mean for the bond market?
I'm not surprised that Bitcoin is recovering. It's acted as a risk asset for a long time here, and it has been in a bear market for months and months here. And so it doesn't surprise me at all. I feel like it had bottomed out, barring any sort of black swan event or negative economic event, a geopolitical event. I think it's found its bottom.
For weeks, investors have been forced to navigate a market dominated by uncertainty. A conflict involving Iran threatened one of the world's most important energy choke points. Oil prices surged. Traders began pricing in the possibility of supply disruptions, and concerns grew that another geopolitical shock could derail an already fragile global economy. Now, everything appears to be changing. According to reports, the United States and Iran have reached a memorandum of understanding that could eventually lead to a formal peace agreement. The framework includes restoring shipping through the Persian Gulf, lifting restrictions on Iranian oil exports, unlocking frozen assets, and laying the foundation for broader sanctions relief. Perhaps most importantly for global markets, the Strait of Hormuz could soon return to normal operations, removing one of the biggest risks hanging over energy markets. The reaction has been immediate. Oil prices have fallen sharply from their recent highs. Traders are beginning to price out the worst-case scenarios. Risk assets have stabilized. And Bitcoin, which sold off aggressively during the height of the uncertainty, has staged a powerful recovery. But the biggest question isn't whether markets are reacting. The biggest question is whether they're reacting to reality or reacting to expectations. Because while investors are celebrating what appears to be a major diplomatic breakthrough, critical details remain unresolved. The agreement is not yet final. Implementation could take weeks or even months, and as we've seen repeatedly throughout this conflict, headlines can change much faster than real-world conditions on the ground. So is this truly the beginning of a new chapter for global markets? Could falling oil prices and improving geopolitical conditions unleash the next major move higher for Bitcoin? Or are investors getting ahead of themselves before the hard work of implementation has even begun? Today, we'll break down Jack Mallers' fascinating argument that Bitcoin has become the world's most honest market signal, why James Lavish believes the worst may already be behind us for Bitcoin, and why Doomberg thinks the geopolitical implications of this deal could have major consequences for gold, Bitcoin, and the future of the dollar system itself. If you enjoy macroeconomic analysis, Bitcoin insights, and deep dives into the forces driving global markets, make sure to like this video, subscribe to the channel, and let us know your thoughts in the comments below. Let's get into it. Every cycle, people make money in crypto. Every cycle, people lose it to hacks, exchange collapses, and compromised accounts. iTrustCapital's premium custody fixes that. It's a closed-loop system. Crypto goes in, but withdrawals only come out as USD to your verified bank. Nobody can drain your wallet because there's no external wallet to drain. Assets are held one-to-one, off-balance sheet, with full tax reporting. And inside an iTrust IRA, gains can grow tax-deferred, or tax-free in a Roth. Real U.S. customer support. $100 bonus when you fund through the link below. Same market, smarter structure.
Late over the weekend, President Trump posted on his Truth Social account, the deal with the Islamic Republic of Iran is now complete. Congratulations to all. I hereby fully authorize the toll-free opening of the Strait of Hormuz and simultaneously herewith authorize the immediate removal of the United States naval blockade. Ships of the world, start your engines, let the oil flow, President Donald J. Trump. And this was posted on Twitter by the White House. Okay. Shortly after that, everyone started to try and engineer, well, does that actually mean the strait is open? Mind you, we've been bamboozled, us being just the public, the world, the people, many a times. There's a deal, there's no deal. There's a deal, there's no deal. It's open, it's closed. It's open, it's closed. And that's why on the show, we've just been very much, we're going to ask the questions. If it's not open, we're going to move on. We're not going to waste our time trying to chase politicians around. And so everyone's starting to try and engineer, well, let's just assume this is true. When would it actually open? So we've talked about, it's not like flipping a switch. I mean, these are physical trade routes, physical commodities along the lines and the ethos of proof of work and Bitcoin. These are not things you can just snap your finger and print out of thin air. This is not an Excel sheet you can just update on a whim. And so this from PBS News, even with a deal to reopen the Strait of Hormuz, it could take weeks or months for oil to fully flow. And so that's true. And so as President Trump announced this, everyone was starting now, mind you, and I'll reiterate this point a few times, Bitcoin reacted immediately. Bitcoin continues to be the only real free market we have in the world, the only functioning smoke alarm that we have for fiat liquidity. And so if you want to understand the health of global markets, the health of liquidity, look no further than the Bitcoin price. You know, when Bitcoin and gold have been selling off recently, I think that is much more accurate sentiment of what's going on in the world than the stock market. Consumer sentiment's at all-time lows, stock market's at all-time highs, as we've talked about on the show. So clearly, the fact that those aren't correlated mean that they aren't speaking the same language. They aren't conveying the same message. And so Bitcoin rocketing 5% higher just off this news alone is fascinating to me. Bitcoin is working as a global smoke alarm for fiat liquidity. It is a signal of truth, a beacon of honesty in a world that's becoming more and more polluted with nonsense, with garbage, especially with AI slop nowadays. We're being just like demolished with information, overconsumed with information. And I just find it fascinating that Bitcoin can act as a true free market beacon of hope. So anyway, I looked to the Bitcoin price to see how real is this deal, and seemingly it was pretty real. And so everyone's starting to try and engineer, well, when is this going to open? What does it mean for the oil market? What does it mean for global supply chains? What does it mean for the bond market? Fast forward to an hour before I hit stream, and it looks like the U.S. blockade is actually still in place. What President Trump tweeted had not started yet, and they have changed the date until Friday. And so this is a quote tweet from Rory. Looks like the U.S. blockade is still, in fact, in place. Nothing changing until Friday. And he's quote tweeting a screenshot that says, blockade of Iran ports remain in effect pending execution of a U.S.-Iran ceasefire agreement scheduled for June 19th. And today's June 15th. And so that is why we don't chase politicians around. That is why we wait. This is why I think these things are going to take longer than people expect. We're dealing with physical commodities. You can't print oil out of thin air. You can't print the Strait of Hormuz out of thin air. You can't print ship vessels out of thin air. These things take time. These things are hard. I think we are being misled as to the gravity of this situation. And then right before I hit stream, the Vice President of the United States, J.D. Vance, started to come out with language to the press around how this is just an MOU. It's only about a page and a half. The document is really general. And so the Bitcoin price has actually started to correct a little bit because the public is now starting to question once again the validity of what was actually agreed to. Was it just a general agreement where Iran and the U.S. said, hey, in principle, if you agree with me and I agree with you, then theoretically we all agree. And if that is what was agreed to, but the blockades are still in place, ships aren't moving, and things are now not happening until Friday, is the market going to correct back?
Mallers remains deeply skeptical that the story is finished since recording his comments. President Trump has clarified that the agreement remains a memorandum of understanding rather than a finalized peace treaty. He also stated that if negotiations fail to produce an acceptable final agreement, military action remains on the table. Additional reports have challenged some of the more sensational claims surrounding the deal, including reports of a massive $300 billion reconstruction fund. In other words, the market may have received a positive signal, but significant uncertainty still remains. The Strait of Hormuz may be reopening. Iranian oil may soon return to global markets. Energy prices may continue moving lower, but many of the details investors are currently celebrating have yet to be fully implemented. And that's where the conversation becomes even more interesting, because beyond the headlines surrounding Iran, the market is beginning to shift its attention back toward the issue that ultimately drives almost every asset class over the long term: monetary policy and liquidity. That brings us to investor James Lavish, who believes Bitcoin may have already established an important bottom and that the next major catalyst could come not from the Middle East, but from the Federal Reserve itself.
It's not surprising that a deal was struck this weekend and on the anniversary and all, like you just laid out. We're headed into, I mean, we're deep in, the front end of now everybody preparing for this midterm election. So I fully expected a deal to be done before we got into the campaign season, which we are entering. I know the summer's slow, but that's when everything gears up. And Trump is well aware that this is a big issue for re-election for a lot of his, for a lot of the Republicans. So to hold majority, he's going to have to win a lot of seats. So. Or keep a lot of seats. So is it surprising? No, it's not. And then, of course, you had Friday, like you said, the SpaceX hype, and it's real. The hype is real. It's crazy. We can talk through that. I'm not surprised that Bitcoin is recovering. It's acted as a risk asset for a long time here, and it has been in a bear market for months and months here. And so it doesn't surprise me at all. I feel like it had bottomed out. Barring any sort of black swan event or negative economic event, a geopolitical event, I think it's found its bottom. I do expect it to continue to trade sideways here for a while. It would surprise me if it breaks right back up into the high 80s and low 90s. But it doesn't faze me at all. The volatility in this name or this in this asset has been pretty steady for a long time. So that all kind of sets up for where we are today, which is the first week that we're going to hear from Kevin Warsh. And that's something we should probably talk about, because that to me is something that the market's a little bit on pins and needles on, and they're trying to figure out. You've got the Fed funds futures that are still pricing in nearly a full nearly a full raise by December. And I think that this week and these meetings, and they're not going to do anything with rates. I don't think he's going to come out and be hardline either way, but people are going to be listening very closely to what words he uses, how he changes that the boilerplate press release that they put out every single meeting, what words they change, how they adjust them, and then really what his overall tone is. And that's going to be a very important indicator for the bond market. And as we all know, the bond market is driving all of this along with the energy markets. And so this is an important week geopolitically and politically. And then just from the Fed side, it's going to give us an indication of where he sits at this moment. And we can talk through what we really believe is going to come out of that.
Doomberg, your initial thoughts?
Yeah, where to begin? So much to discuss. And also lots of stuff that we're working through that we haven't published or would never publish, but still things that I'm thinking about. Let's start with the Iran war. Look, I think as time goes by and historians truly assess what happened here and the spin and politics are sort of put to the side, the U.S. achieved none of its objectives in this excursion against Iran. If you go back, and we have gone back and watched the video that the president released from Mar-a-Lago on the 1st of March, and you compare the stated objectives and justification for the war and where we are now, it's a profoundly different outcome than the president had been led to believe or assumed or was otherwise convinced against his better judgment, however you want to frame it. This is a stunning result. And kudos to the president for taking the L, even though that's not how it's being shaped. But I do think if you start with that as a foundational input into your mental model, it's wildly bullish for gold and Bitcoin and all the US dollar alternatives, because it is a turning point in the history of the last 50 years of US dollar military-backed hegemony. A mid-tier power before the war absorbed everything that the US and Israel could throw at it, and it has emerged, arguably, as as the stronger side in this war. It's just you can't deny that.
Taken together, these discussions highlight why the next few months could be so important for investors. Jack Mallers sees Bitcoin functioning as a real-time signal of global liquidity and market confidence. In his view, Bitcoin reacted positively because investors interpreted the Iran developments as reducing systemic risk and easing pressure on global trade and energy markets. James Lavish agrees that markets have reason for optimism, but he also points investors toward another critical variable, the Federal Reserve. While geopolitical tensions have dominated headlines, the bond market continues to focus on future rate cuts, economic growth, and liquidity conditions. Those forces ultimately influence everything from equities to commodities to Bitcoin itself. And then there is Doomberg's perspective. Whether viewers agree with his conclusions or not, his broader point is difficult to ignore. Major geopolitical events can reshape investor perceptions about monetary systems, reserve currencies, and global power structures. Historically, periods of uncertainty and transition have often benefited alternative stores of value such as gold and Bitcoin. The result is a fascinating setup. Oil prices are retreating toward pre-conflict levels. Markets are attempting to determine whether the Iran agreement will become a lasting reality or merely another temporary pause. The Federal Reserve faces increasing pressure from slowing growth and shifting economic conditions, and investors continue searching for signals about where liquidity will flow next. That's why this week's comments from Kevin Warsh and the broader Federal Reserve discussion could prove just as important as any geopolitical headline. Markets will be listening carefully for clues about future policy direction, because ultimately liquidity remains the fuel that powers every major asset class. For Bitcoin investors, that means watching several moving pieces at once: the implementation of the Iran agreement, the trajectory of oil prices, bond market expectations, and the Federal Reserve's evolving stance. The good news is that after months of uncertainty, several of those factors are finally moving in a more constructive direction. Whether that translates into the next leg of the Bitcoin bull market remains to be seen. But one thing is certain: the next few weeks will provide investors with far more clarity than they've had in quite some time. If you enjoyed this analysis, don't forget to like the video, subscribe to the channel. Thanks for watching, and we'll see you in the next video.